Greetings, greetings. Welcome to this week's macro measure. Greetings, market rebels. I'm Wayne. My partner Ryan is probably off the slopes in Vermont and headed home, I would think. I'm not sure where market outlook stands, but it is Sunday, January 29th, a little bit after 1 p.m. here on the East Coast. And we are going to get moving as usual. Too much to cover, probably too much to cover, a lot to cover, too much to cover. There's our trusty disclaimer that I'd ask you to take a look at. And here is our trusty intellectual property rights notice. I'd also ask you to take a look at this as well. Thank you very much. Now we'll just switch over. Let me get geared up here. And let's see if I can get some cooperation. And if I do, this will be good if I do. And of course, I've got a dog chiming in just in time to record here. So hopefully we are seeing, and I think we're seeing my main screen. And we're kind of picking up where we left off, because last week we made it a point to try to cover some of these big tech, mainly tech names in the QQQ, those main components. And they're obviously part of the S&P too. Some of your bigger names, which you all know. And it was fortunate timing, I think, because we had noticed, just doing what we do each week, well, at the conclusion of each week, that a lot of the charts really seemed to look pretty good here, and they were interesting potentially for trades. And of course, if that were the case, right, and these things did sort of fulfill some short-term bullish destiny, that this could really create a strong market and allow the market to continue to go, the Qs especially. And that all kind of worked out, I guess. I think even like some of the lesser holdings, they helped power up pretty strongly. But overall, a lot of these had a good week. We did actually see some, not there. Where was it? Thought I had it there. Where is it here? It should be up here. Oh, maybe here. We did see some really, which I love to see when we get some of these, the biggest of the big, as you can see, Microsoft, Apple, we had Square, let's see, Snap, not so big. These were all made their way in as bullish trades, but there was a lot of bullish activity that was occurring this week. And we were, of course, willing to go with it. So it seems like maybe some hedge funds, I don't know, some big players happened to notice that it was time potentially for a lot of these big names to move. They got involved, and these became, there was no choice. I mean, we already were on the record. Even if we changed our mind, it would have been hard to really say, no, we're not adding CRM or Apple or Microsoft, because, it was a strong market. Market's been strong, so on and so forth. And they all look good. Almost all of them looked really good individually. So it was very hard to say no when that UOA appeared. And I think, fortunately, in most cases, it worked out. It was a little tricky at times, but it worked out. But that kind of fulfilled the destiny of making it to, and this really isn't the chart for it. Let me see if I can get the right chart up here. We can work with this one temporarily. This really wasn't what I had in mind. But this kind of, we're talking now about the Qs here, but this really did help right after that reversal there on Tuesday. Into Wednesday, this really then powered up after that. And of course, the SPY did make it to the 408, 409-ish level we were looking for. And then it backed off late on Friday. And so this happened a little more quickly than I thought it would happen. I thought they'd probably try to get this to here by maybe Tuesday, just in front of the FOMC and some big earnings and things like that. But they pushed it there more quickly than I thought. And I highlighted, right, that here's that. I'll click on it just so it highlights. It should highlight. Maybe it's not going. Well, anyway, that lighter kind of violet purple, that is that's the 200-day. And then up here, I changed this to kind of like the bear market downtrend line. I changed that to more of a kind of pink or something, just to have it really stick out. And if we bring a little more time in here, we can see, where we are, which is what I'm always harping on, right? Where are we in the grand scheme? And you've got to dig in further in different ways, I think, to really figure that out. But we've been noting, there's a lot of things happening here. Some may see the cup and handle, some may see a larger inverted head and shoulders with compound shoulders. Whatever the case may be, there's definitely a lot of potential bullish patterns. And I'm thinking that they're, as of right now, of course, I'm thinking that they're on their way to, just following up, I think, with our comments of late, they're on their way to potentially laying a tremendous bull trap if the economic information that I'm reading has any merit to it, because it just seems like they're front running. Bulls are basically front running that we're all back to, it's all well and good. I'm not so sure that that's the case. I'm not really a believer in that, but as everyone that's been watching the videos and really been a part of Market Rebellion for the last several years, we don't fight against things. We try to go with them. And it doesn't matter what our opinions are. We just really try to embrace the charts. We try to be objective and just say, look, this thing looks like it's likely to do this, or you can never really know. So we're kind of phrase it that way. A lot of people, like when you make a call, I prefer to not do that for psychological reasons for myself and for folks that are subscribers, and maybe just folks that are watching the videos. I prefer to just stay open-minded, because I've said it before, but the 1999 in the NASDAQ really redefined for me, and probably forever for me, what's possible in a stock market. And things can get beyond, your wildest dreams. At least they did mine. And ever since then, I never rule out anything. And I realize that you've got to go with the trend and the momentum. That's the key to this game, and to do it in a disciplined fashion. And you should do very, very well, especially if you're using options. But this really looks good. The only problem I think now is that, this could be a trap, and they did leave some short-term overboughtness. I think that overboughtness is more in the cues than other things. So that's where I'm thinking like, hey, where's my RSI here on a daily? It's, right near 69 if we round it up properly. So that's already there. The easiest money on this bull side has been made. And fortunately, I think I think the breadth work that we do, which is not that extensive on the videos, but things that we keep tabs on, that really helped us to really be prepared to flip around in what our take on the market was, and go with this rally, and expect it to kind of potentially fulfill its destiny, meeting up with the downtrend resistance line, the 200-day, yet again. And that's what we've just done. So I think that the improvement overall through the market breadth measures has been really a good thing to guide us, and help us stay on the right side of the market ultimately. In the base camp we've talked about before, and so on and so forth. So I don't want to belabor that. I'm trying to find, let's see if I can find the, maybe it's right here, I think. So what I wanted to flip over to are these measures that we talk about in terms of breadth and where we are. And I think you can see this is a percentage of stocks above the 20, then we'll do the 50, then we'll do the 200. This is a simple moving average, but that part's not important. It's just really to take a look at it and say, well, okay, what's the story here? And you can see we really, really got up there recently, and we could get even higher, right? Here's where we are. We backed off a little. But if they keep pushing this, right, you could really have something that's very special, and probably in the sense that it's really overdone. So I think they brought this thing here. You've got to be really careful. It's kind of one of those paradoxical things about technical analysis. The more times a trend line has been touched and respected, the more valid the trend line is. But the more times it gets touched, the greater the likelihood eventually that it'll be broken, right? It's one of those things. And this is the same thing, I think. If they really push this, this would be really a strong measure, right? If we see the 50, if they really start to push this through levels we haven't seen since the market was in a bull market mode, that's probably a longer term good sign, but I think it's a shorter term bad sign, right? Where it's just gotten a little too hasty. Maybe there's too many people on board that are now willing to convert to the bull side. And so I think now we have to trade things even more nimbly than we normally do, and we normally have to trade very nimbly, so it's going to get, I think, a little bit harder. We talked about this being an exciting year. I think that's delivered so far. A lot of opportunity. I think that's been the case so far. It's amazing, the interesting thing is that there's a lot of things that we're telling us that this could happen and maybe would happen. So we'll take a look at a few of those just based on the historical precedents. But here's the stocks above the 200. This is probably more meaningful than the others, but you're getting back to levels, right, that you haven't seen since 2021, which the bull market was really still intact. In fact, I think it peaked out maybe like on the 4th of January of 22, somewhere around here. But you could see there was a deterioration, right, of that. More and more stocks were falling apart. This is why we were really advising caution. The same reason we started flipping around here and saying, okay, well, they're trying, more money's going back in. Doesn't make sense to us when we think about it, but that's not what matters. What matters is the action and the supporting action, the breadth, and those kind of measures of health and things like that. And they're making new highs that are eclipsing basically the 2022 bear market. That's no joke, but again, probably overdone in the run, and but in the long run could mean something. And here's another few things we can add to that. Here's where we are in terms of the CNN. Again, it's not the most ideal measure, but we at least have something to consistently work with. And this is getting close to the extreme greed readings. And this other alternative one we found, this one has just continued to pop higher and higher as well. So this is working its way back up still. This is an issue here for some reason. Doesn't seem like it really is it responds all that well. It really should have a little bit more room to the right there, but it's 77% are in an uptrend. So that's you can just tell you're getting up there, and this is possibly indicative of a big change, right? It could be that there really is a new bull market on the way, and people like me who are fear and greed indexes there, market sentiment, extreme greed. I mean, people like me are thinking, well, this is really not, but it could be. Like, I always acknowledge that, right? Like a lot of the negative fallout that I'm expecting is still a little bit away. I still think that that's the case that we're going to have. This is going to end up being more likely to be a fake out. But again, I would not trade it that way. I would not invest in it that way either. What I would do is, with options, we have so many ways we can adjust. So that's what I would do. I think I've always said that after I learned the lesson myself, the best time to make your adjustments is the first time that you realize that you should. And if you wait on things, the regret grows from there, which, you don't want. So that's the beautiful thing about being a trader, that you can adjust and then you can readjust or unadjust, however you want to look at it. So I'm a big believer in that, because that's what allows you to really be nimble, right? That you are willing to adjust, and you don't care if you just adjusted the other way. If something changes dramatically and tells you, oh, well, you better readjust the other way, then you do it, right? Because you can always readjust from there. You don't want to overtrade. It's a knack. It's a fine line. I get all that. But doing what you think is right is really, I think, more important if you're a really active trader and you're a really active hands-on investor. So just a few things there. The other thing I can do is save you a lot of time. I'm going to go into the charts more, obviously, but my assessment this week is really that we know that the FOMC meeting, and we know that big tech earnings are going to impact the market. How those play out, probably, not for sure, but probably will dictate ultimately the fortune of this week. So I could go into all kinds of stuff, and I'll go into some for sure, but what really matters, I think, is how the market receives the Fed fallout, in other words, the Fed reaction, and what these big tech earnings, well, I shouldn't say just tech, but the big earnings reports, what happens on those conference calls, what happens with those results, the reaction. The market's kind of been able to shake off some stuff that really probably wasn't all that great. And of course, the tricks are still being played. We lower expectations and we drop the bar down so it's very low, and then they jump over it and everyone cheers. That's just something that's so old and tired. But I don't think it'll ever change until the entire country gets serious again, which I don't know even if that will happen. But I don't think the country is a very serious country anymore, and you can get away with all kinds of shenanigans these days. That's just the way that it works. Just typical old guy talking. But look, the Fed watch tool is basically telling us, look, pretty much right for this is for February 1st, pretty much saying, you're going up mildly here, probably 0.25, and then they're expecting a little bit more, I think, again in March. And interestingly, I'll come back to this stuff, but we did cover a lot of these, as I said, here, and we covered here, and a lot of those things have gotten overdone. So just be careful if you did get involved in some of these big tech names. I can't go through all of them, unfortunately, but a lot of these really did get a little overdone. I think NVIDIA is one that comes to mind. Might have been a few others, but there's Apple earnings looming. Overall, they were pretty good performers last week, so we really can't complain. I'm going to hop back over to the charts after I take care of just a few more things. So I just want to remind everyone that the third year of a presidential term is the best year of them all. Here's the fourth year down here. 7.4 is the average return really over the last 100 years, nearly. Not quite, really 95, but you get the idea. Third year is 13.5, so it's not quite double, but it's somewhere in that neighborhood. And you can see that the first and second year are not nearly as good as the third year, nor are they as good as the fourth year. So that's what I mean by when I say that we really shouldn't be surprised. The gang seems to be trying to follow the playbook. I thought I had that here. Okay, yeah. So here's January, right? Here's the start of year 3 after the midterm elections. And you can see that they're just following the playbook. And remember, right, if you're new to all this stuff, just remember that bulls will have an excuse to start buying shares of stock at the drop of a hat, a mild breeze. Doesn't take much for them to get ready to start buy. And that's just been the way the market has been, I think, at least since Greenspan took the helm of the Fed and pretty much made sure that the reckless bulls had a friend at the Fed. So this is what you have. And you can see that the rally is pretty solid all the way kind of into about 2/3. So maybe, and then you kind of have a little bit of a dip, but then you come back. So probably a little different kind of a year than most. But you get that. And of course, we're not expecting things to follow this to perfection. There was a lot of good seasonal stuff last year that I think the market tracked well. But my point is that there's a really strong burst out of the gates. And that's what we're seeing. That's what we're seeing. So that this is something that fortunately we got dialed into maybe late last year or the first week of the year. I can't remember. And it was good to know this and then kind of overlay this against the charts that we saw that looked pretty good overall with things improving. And so here's that pre-election year, prior to next year's presidential election. And you can see that it really does get out of the gates well. It stays pretty strong, right? And then you get to those earnings, and I guess a lot of good news is typically baked in for those Q2 earnings, and then you kind of don't do much. But this is not all that uncommon. You can see that summer period is not normally all that great, not normally. And then finally, right, as we said, you kind of dip a little and you come back, and the other years finish strongly with the seasonality. So you've got the idea that it's similar, it might not be this exact same, but it's pretty similar in the NASDAQ. So a lot of this shouldn't come as a surprise. So what I did was to try to prepare something a little bit different, because I do realize I'm not that obtuse about it. I do realize that is not it. I've got to find it. I don't know why this switched views on me here. I want to keep going here. No, that's not it either. I've got a view that just something changed when I went into broadcast mode, and now I can't see my charts so I can pick the right one. I'm actually thumbing through them. Okay, so this is what I wanted to arrive at. So I put a little something special together for this week because I know my charts are, pretty messy in terms of creating a video, but I'm really kind of maxed out. I've got to figure out why, I show so much. I've got so much RAM in here. I think I had 64 gigs of RAM and a pretty solid AMD processor. And it seems like everything should run really smoothly, but I get a lot of slowdown to the point where I've got to basically restart. But here's the SPY. And this is, again, that trend line we've been talking about, and everyone's got on their charts at this point. We mentioned that several times. And you're through, right? I don't have my SMAs up there, but you're above the 200 and all the rest. We've been above that, the 50, stuff like that for a while. There's nothing new there. They've got this up and through. And what I did put in here to make this very obvious was about that 410.91. So call it 410, 411. I'm not really big on as getting it down to the penny because it's not easy to do. And there's only so much time in a week or day, excuse me. So that level is clearly a big one. I think that's your next big thing, right? And I think what would happen here is that the smart move for bulls, and again, they're not known for being smart or patient, but in my book at least, smart move would be to back this thing off a little bit and then kind of come back a little to above 400-ish, or just right near there, maybe drop it a little below and then rally. But with the Fed being only days away, with these mega cap earnings being only days away, I mean, it's really tough to say. I don't think every stock is in overbought land. For example, the SPY itself, it does have some flashes of overboughtness or approaching overboughtness, I should say, on some heavy duty intraday charts and on the daily. We can even see that we're at 64-ish if we round it off up here, but it's not there yet. So could they do this? Yeah, they could. I mean, it would just be better if you're really a bull. I'd rather see it back off a little bit and then, work its way up, sort the whole week out, and then work its way back up and through. I'd feel better about that rather than just bursting through. But that's the thing. I think you have a tough call here because we have seen pre-Fed runs where they've ran into the Fed strongly. We've seen them cool their jets in front of the Fed this year at times. We've seen big sell-offs after the Fed. We've also seen a couple of rallies, I think, of late, more so than sell-offs after the Fed. So this is getting harder and harder at this point, right? Especially with what we've seen. But notice, right, that there's this sort of triangle forming as well on this side. You could say, well, Wayne, what about the inverted head and shoulders? What about this kind of ugly cup and handle? And that's all in there. Regardless, both of them are bullish. Ostensibly they're bullish if they fire. But I do think you've got to at least get through here. I think if they get through there, this is where there'll be trapping. This is where I think the bull trap will get set somewhere between this level and here. And they could close this gap. They could exceed this high. Then they're going to run into this level up here, which is about 431. Oops, sorry. Let me make sure 437 and change. My bad. 437 and change. I think there's a level up there. There's also obviously this level here, right? We don't want to skip over this kind of 430-ish level. I don't want to put them all on here. I'll be right back to messy charts all over again. And then I think there's another couple projections that get us to about 424 in some things I was doing. So I don't want to even get into like that. That's not that important in terms of where does it stop at. We could look for the loss of momentum and maybe some failure or exhaustion once it gets there, if it gets there. But I'm thinking the way that it is now, if the Fed, right, knowing that it's kind of overbought and approaching overbought, and they really have had a big run, clearly coming up to this resistance level and then not getting through and then starting to fail from there, that would be one scenario. Pushing it through and making it like they're going to really break things out, that would be another, and then failing would be another scenario. Pushing it up and through, backing up to it, holding and going would be another scenario where they really push their luck. But they do have that magnetic situation here with this gap, which we highlighted right in there. So that would be another level, right, that you would be cognizant of near, say, 421 to 424. The next one will be 430, then 437 in SPY. But this hopefully is a cleaner view for everyone. And if you say, well, where do you, I don't do a lot of, hey, time projections. I think the only thing more difficult than trying to predict where a stock is likely to be in price in the near future is to try to not narrow that down to a particular date. But interestingly enough, one thing I look at for that suggests that if they do set this bull trap and they get up to this big time resistance up here near 437, that would happen somewhere right near the March Fed meeting, coincidentally enough. So that would be very interesting if that were the case. But the projections I have, a lot of them have this market going there. A lot of different things have the market going there. And whenever I see a lot of different things suggesting a level like that to me, then I take that a little more seriously than when multiple methods come up with a different answer. Multiple methods are coming up with an answer that says 437 in the SPY. And at that point, if there is the bull trap, you would think that would be enough to definitely set the bull trap and even have like a melt up kind of blow offish type thing where, remember, they would take out these highs, this high, they would take out this high, they would close this gap. So a lot of things would happen that would have people thinking, well, look, lowest low, but massive reversal day. And again, breadth has generally been improving and other measures ever since then, really. And then you have this, these highs, which are similar, but then you have the higher low, and then you take these highs out, you have higher highs, and you'll be looking at a possible trend change right in the minds of some. Some might even think already that there's a trend change because this line has been exceeded and held for 2 days. I think that's, jumping the gun. I wouldn't have a problem trading it short term that way because, again, you can always adjust, but I don't think I'm convinced that this is over yet, right? So I'm more of, well, now that it's done what it's done, I'm more in the camp of let's, again, wait and see what happens here. And we don't have a choice really because we have major news events that are just days away that are going to impact the market one way or another, or maybe in both directions. So that's what makes a prediction hard. If you say, well, the chart should have an answer for you, maybe it does, but I've seen probably some of the most beautiful setups that you could ask for, and you could check almost every box that you like to check on your checklist. And I've seen things like that just get obliterated because news, maybe there was just people that were just poorly positioned, or there were too many people on one side of the boat, as they say. And I've seen that kind of manipulation and in the short run, and it can be painful, right? So it can be tough. It's a tough game, even though you can have success at it, you've got to work at it and you've got to be nimble. So I would do that. I would do that this week. I think you should be able to still trade and have a good week. I think the bulls have seized more control over this market, but I think this is not a young push higher, right? This is maybe middle age to a later stage push here. It depends on if it takes this out and can hold this, right? This level up here. So I think let's just call it 411, right? If you get through 411, it's probably fair enough just to say 411 right near there. Get through there and you're able to hold that. I guess you keep giving the benefit of the doubt of the bulls. I do think that they have continued to cement their control. They're really just a couple days away from having a lot of the monthly charts look better and really move in their favor in terms of control. And those things, like, let's take a look at that. As a matter of fact, let's take a look quickly at this on the weekly and daily, and you'll see the RSI numbers on them. See, you're only at about 55 on the weekly RSI. So that's telling me, right, that if they can get through here, this is very obvious on this weekly, they can get through there and hold it, maybe you've got to have a little short-term give back or pause. But if they can get through there, then I start to think, yeah, they're gonna keep working this thing up. And this is what I mean by being like an incremental chartist, right? That's the school that I'm from. Like, I always look at it like, well, if they get through here, let's see if they can get through, close that gap. If they do that, let's see if they can take out that high. If they do that, let's see if they can push through this resistance and hold it. And that's the thing. And at some point you'll probably get a false breakout if it keeps going, and they'll pull the rug a little bit at least, or a little more than they have. But they're clearly front running what they think is the end of the bear market and bear market times. I'm just not convinced that's the case. I have a hard time with QT supposedly reducing the Fed's balance sheet with rates where they are. I just have a hard time believing that it's all over already. I think there's a lot of negative fallout, but it doesn't really matter, right? We don't care about that. We're going to go with the charts, and the charts have been telling us to be bulls now for a while. So we've been probably just saying, like, the bulls have been taking more and more control. Let's take a final look here at the monthly, just to give you an idea on these big picture views. And there you're at 52, right? So that's not so bad, right? You're sort of in a situation where short-term market is a little ahead of itself, I think, needs a breather. Long-term, if they want, they can still move this quite far from here to the upside without really becoming overbought on the weekly level, on the weekly view. And that's something that we have to respect. Now, having said that, there's nothing, right? If you get up to here and the Fed really pours some cold water on this situation and takes away the punch bowl to boot, you could end up having a double top, right? If we come up near here, you could have the double or triple top, or just failure from the top of this triangle that we drew. And you could be on your way back down and taking that significant breather or pullback, and you could see that. I mean, that's what you really need to see. So I would not rule out anything. I think the market could be surprised by what the Fed has to say. I think maybe they've just, like I say, front ran things a little too much right now. But again, I don't know what kind of confidence level I could assign to that. I really feel like they're so close, and the way it's been so powerful, and they've been shaking off so much news that I think should have affected it negatively. It's almost as if the news isn't mattering very much. And excuse me. So that's really indicative of that bull market resilience and mindset, where they use bad news to just buy shares at lower prices rather than having chased it up. That's what has happened so far. But again, we could see a major change based upon what the Fed does. So it's a tough week. Everyone that's been with us for a long time knows that I'm not a big fan of trading during earnings season and Fed week, because you can do a lot of great work and the wrong thing gets said, and you just get, a lot of your good work that normally works, things that are very good setups that normally work very well, get obliterated in no time. And that's just not the kind of environment I want to trade in. I'd rather be in something where the charts ultimately are left alone, so to speak, and you get truer action that's not affected by these big announcements. But diamonds kind of led the way back, and they've been subdued. But you can see they're sort of, and I'll just put some lines on this. So they're triangulating, I think, a little bit right now. And we'll just extend. Oops. I thought I clicked there. Just trying to crudely draw these, nothing fancy. But you can see that that's where we're getting right about there, just ballparking it. So again, when you get this deep into a triangle, expect something, right? That is, 3/4 of the way in. You really want to be ready to go. Triangles don't normally reach their apex where the lines would intersect. So you're getting closer to that point. So just be ready there. you can see the same thing though. I mean, if you look at the inverse, you can see there could be a shoulder there. There could be a head here. This could be a right shoulder inverted, of course. Could be, right? So you've got to be on guard here. Remember though, right, the other flip side to this is when patterns that are in place that a lot of people are thinking are going to fire do not fire, and that's not good. The IWM, right, this closed probably at a what? A high that we haven't seen since, what's the close here? 189.67. So that's probably the close you've got to go back to. So this is the best close in about 4 months for it, and it's working its way through resistance. So this, again, I'd say, like, look, this looks primed to go. If there wasn't the Fed, if there wasn't all the tech earnings deluge we're going to have, I would think that, okay, be careful because it's an obvious, really obvious breakout, but this has got the potential to go back up and start challenging higher highs. But I still think that it's just that I know you have to be extra careful as a result of what we've been seeing. Let's take a look at the Qs. Other things I'm going to probably skip this week because I wanted to share more about what's happening with just the UOA that we looked at, and then the other information where we've gotten to frothy in this market already. So why you've got to be careful. And again, you can be a hero if you nail how they react to the big tech and the Fed, but at the same time, if you're wrong, it can get ugly quickly too. And if you don't react quickly to neutralize your risk there, it could be rough. But QQQ, I mean, you can see it's above the 200. It's pretty much the same thing where if I extended a resistance line over, it's through. The reality is it's through. So now we just have to see if they can, what they can do with it. And I'm expecting it to be hard. I would say that here's a gap up here near 307. I still think there's a few more percent in these indices. I would be betting that after a small pullback or pause for a little bit, they would keep running. But the FOMC and the big earnings that I keep repeating, they are going to probably dictate it. But I would say I'm more of a very short term. I would be a little more kind of neutral to bearish that it should pull back. A little bit longer term, in other words, like second half of the week, I would be more bullish if that shallow pullback materializes and takes some of the very short-term overboughtness out of the market. But of course, that all changes with the Fed. And I'm really still a long-term bear, but willing to trade if this thing acts properly. I'd rather trade this as a bull, this and the SPYs and a lot of things, trade it from the bull side more than the bear side right now, unless we have a dramatic reversal post FOMC meeting. But I still think they're going to try to, I think if there were, like I say, if there weren't all these issues in our way, these different factors in our way, I think they're going to try to tack on a few more percent. If there wasn't anything that could upend that, I would really think that ultimately, after, again, a short pullback, they'd probably tack on a few more percent at least, maybe between like 2 to 4% on the Qs and the SPY. And then I'd have to see where it goes from there. That would be my take. But again, final word really is that we can't look past the Fed. We just can't see what happens past there. And I'm really interested in what's going to happen this week. This has been a very interesting time. So I hope that something that I shared helped you this week. It is a tough one, as I've noted many times, probably too many times. But once we're through this, I think this is going to still lead to some really good trading. So I think the second half of this week, and from that point on, the rest of the winter time is usually quite good and active, and people are positioning or repositioning. So it should be pretty good, I think, in terms of activity from here on out. And I'll see what I can share too in sector situation. I want to get that taken care of for everyone and get that out the door. And so everyone have a great day and have a great finish to your weekend and a great upcoming week. Just be super nimble. And I think you'll be happy in the end that you did that. And just, again, like Greg McDermott says in our Rebel Pit, it's always good to sit. Well, I shouldn't say always good to, but it's always good to realize that you can sit on your hands, and that really is a trading decision. And sometimes, right, once you reach close to the Fed, I would, neutralize my risk to a great degree and not force anything until that post-Fed volatility storm starts to reveal, where the next leg of this market is likely to go. So on that note, thanks for tuning in, and we'll be in touch.